GB Cycles here with an update on November the 5th. So a quick say introduction to my work here first today. I work with fixed cycles. However, the market, if the market operated perfect by these fixed cycles, everyone would see them and it would be no secrets. But these cycles, they do not work perfect, and they tend to change and do some strange behavior sometimes. So I always have to monitor if the market follows the cycles or is starting to do something different. So I also do say normal analysis parallel to the cycle work. So the cycles I'm using, I have a 3.5 year cycle that goes back 100 years, and some markets and the US also seems to have a more dominant 7-year cycle. And the 3.5 year cycle is made up of 4.5 4-week cycles, and again 9 20-week cycles, and 18 10-week cycles. And then we also have the 4-week cycle that I'm following. That's and I should say I also use a lot historical patterns. I look at earlier bear markets and see if we repeat historical patterns. So current situation, I'm not quite sure how the 4-week cycle works right now. We had an old cycle, it changed, so right now we have the blue 4-week cycle. But is it still working? Because here it started to invert. I'm still assuming the blue 4-week cycle is still working, and it says we could still have some upside bias the coming week here, because the cycle turns really bearish in 1 week or so. But if we have a snap back to this old red 4-week cycle, you know, that correlates with current behavior. We topped out with this, and it's now going down to middle of November. So I have some different scenarios here, both going down. Also, I should mention the 10-week cycle. It has a low sometime late November to mid second half December, and the 20-week cycle also has its low over here. So I should say I don't have a clear edge for the coming week. I have something saying we could try to bounce up the first Monday, Tuesday, perhaps trying to make a double top. I could also see this as a small bear flag, and we could go down. So conflicting signals here. You know, here's the 10-week cycle, and here's the projection from the recent cycles. It had a top right where we did make a top last week, and it's going down into December sometime. So the cycles can fool us. You know, this 10-week cycle in the US was a bit strange. It had a low, a collapsing low in the middle, and the final low was a higher low. But many markets made their lowest low over here. But you know, if you say that's the cycle low, so where's the 10-week cycle low here? Someone will call that the straddle top or something, I think. There's no cycle low here anywhere. But if you say this is a 20-week cycle, yeah, it's a bit short. If that's, but you know, the market could suddenly, that's not the correct cycle, but the market could switch over to that. rhythm, so to say. So is this a 20-week cycle low, or is it just 10-week cycle low? Anyway, if you just focus on the 10-week cycle, it should be going down here, or is it here? So I want to look at some historical patterns. After this deep A, B, C, and this big rally up to the 200-day moving average, that could have been a soft landing, and we could have rallied, and it was all over. But when we went down to a lower low, that has given me a signal that we have a hard landing, and we are going much lower. So this big downside and then this big rally failing has a strong bias for more downside, and we should look for this current move here is not finished, this leg down, but it often has a smaller A, B, C pattern, and then we should have a bounce before the capitulation. So what's to look for here? We have the 42-month average and the 21-month offset, and we broke both on this first move down, but we didn't capitulate and we bounced up. So what to look for here? In orange I have the the 20-week offset. We should not break above this 20-week offset. So, but we could, break a little bit above here, but we should soon capitulate down. So let's look at some earlier patterns. This is 73. Here on the first move we did break the offset and the average and capitulated, and then a bounce, but it didn't go above the 20-week offset. But here we already had broken all the levels, so it was no more levels to take out, so it was more this second part of this down leg was more sideways. Then we had a bounce up towards the 200-day moving average, and then we had the capitulation. Let's see, this is 2001. Okay, this is the big bounce B, and this is an example how it doesn't always work perfect. So we should know we have a perfect scenario, but that there can be some deviation from the perfect. As we see here on this leg down, it should be A, B, C, and actually here we broke above the 20-week offset shortly before we capitulated. But this is not the real capitulation. It was here, and here it really tricked us with a double test and actually broke above the 200-day moving average before the capitulation. So going up to 81. Okay, the first move down didn't break any, didn't break the average, bounced, tried to break the 20-week offset, failed, and here we broke down below the offset and the average, but we didn't really break it, and the bounce got above, and then we had the capitulation, but it was no real downtrend, no real capitulation. We have 69, the bounce up to the 200-day moving average, then we have this down leg. The first one did break the average, not the offset. We bounced back up. We didn't break the 20-week offset. So on this second move down, we decisively broke down. We have a bounce towards the 200-day moving average and the capitulation. And I have more examples. So, but what to look for? Well, it shouldn't be much more before we have this decisive breakdown. So if we go up again to a double top, I wouldn't like to see us much up here. We have to get down here. So see ya.